there is a responsibility that the Ministry of Finance has over capital markets and over financial services. That responsibility over financial services and capital markets is an ongoing thing. It has very little to do with the budget. So I'm not going to focus so much on the financial sector as well and the capital markets. That is something that we can talk about later, separate from the budget, because the budget really doesn't have very much to do with that. And again, there are many things that they need to do over there that they should be doing. But on the budget per se, which is what should the tax and expenditure of the country look like, I think they need to come up not just throwing things again to try and lift the growth rate for 6 months or 9 months, and it never really works because as we've seen in the past, but actually start thinking about, given the mandate that they have, that over the next 5 years' time, what do I want to do? What do I want to see India's budget look like 5 years down the road? Where do I want my tax structure to look like? And more importantly, where do I want my expenditure to what should my expenditure look like? There are questions about whether or not India's structure of spending, what we do on capital account, what we do on capital spending, what we do on current spending, that may actually not be the right one if India is actually going to look for and encourage new sources of growth and not depend on the generosity of strangers, basically, external trade to get it through. So I really think that, or I really hope that the government actually sits down and says, look, we have a 5-year mandate. And we are going to look at this as a 5-year project, and here is what we are going to do, rather than say, look, I'm just targeting what's going to happen by March 2020.
The dilemma is, when growth is slowing and monetary is not effective, shouldn't fiscal be easing? Right? That's the theoretical argument. Fiscal policy should be counter-cyclical. But the reality is, if at this point we agree, you get a 0.5% of GDP stimulus, that will just be counterproductive because all rates will go up in the system. Right? But there's a way out, and the way out is, this is the year the government should double down on asset sales. Last year they sold about 0.5% of GDP. Let's hypothetically say they double that to 1% of GDP. Then you can do two things at the same time. You can keep to your fiscal deficit of 3.4% like last year, and the bond market will be comforted. At the same time, because you're generating more revenues through asset sales, not through taxes or duties, your fiscal impulse is actually positive. So you get the best of all worlds. You're imparting a positive 0.5% of GDP fiscal impulse to the economy. Fiscal policy is actually being counter-cyclical without the deficit widening. Right? And I think this is the year where those kinds of solutions, which are now possible with such a large majority, need to be entertained.
No, so finally, something to agree on.
You agree on the fiscal part, I know that.
Yeah, so the disinvestment side, I think, is a given. I think not just privatization, but also asset sales. We have at least some recognition that there is a requirement of fiscal discipline. So across party lines, whatever may have been Nyaya, etc., there is some recognition that if you slip up on fisc, it creates problems on the external accounts, and then it kills the currency and creates more problems. I think across party lines, people have understood that. Therefore, some discipline. So in this environment, can we open up the capital account a bit more? Capital inflows as percentage of GDP are down to 2002 levels, right? Can we change that? Because we get more capital, we can grow faster. So I think from a financial system perspective, there is enough that you can prescribe in terms of a holistic approach to intermediation, to increase of foreign capital inflows, get the financial system working.
I certainly would not like to see more of an increase in MSP and the traditional fertilizer subsidies, more loan waivers, those kind of things. Not that loan waivers are bad. I think we need to move away from that towards a total comprehensive program rather than doubling down on doing the same bad things that we were doing. I think we don't need to do that.